Good afternoon, traders. I'd like to welcome you to a CME webinar, which is being hosted by livewithoscar.com and Dorman Trading. Today, we would like to present to you something that we use as much of a theme of how we run our trading academy and how we feel markets operate in this day and age. And that theme is fundamentals always come out in the charts first. There are many traders out there that are reading the reports that are being released from the Fed, watching what's going on in the news, trying to disseminate what these reports mean, if the Fed's going to raise rates, if they're going to lower rates, what the Bank of England and the Bank of Japan does. And you know what, traders? Those are fundamentals. And I am here not only to claim, but to prove to you that fundamentals always come out in the charts first. It goes a little beyond just fundamentals coming out in the charts first, because thank goodness we have exchanges like the CME who have provided us with electronic trading platforms and slowly are eliminating the pits. And what that has been doing for us is it's been really beginning to make these markets a level playing field where my thoughts about a trade and what I want to do, I type it into my machine and instantly it's filled elsewhere, instantly, with no food for thought behind it, with no floor broker who might have fallen out of the pit before he filled the order by accident, with no clerk who might have taken the order wrong or didn't hand signal it in. That whole entire human element slowly is being eradicated or removed from our trading environments. And traders, I kid you not, that is making technical analysis work better now than it has ever worked in my 27, almost 28-year-long career. For years I have tried, or I shouldn't say tried, for years I have lived by technical analysis. You say live by the sword, die by the sword. And to be honest, technical analysis might have given me 3 out of 5 winning days in a row back in the 80s and some of the 90s, but you could never get 5, 7, 10, 12 days in a row because the analysis had some form of interference. And I believe a lot of that interference was these markets not being electronic, and they were not a level playing field. There were too many steps that needed to be taken to get your order onto a trading floor, finally get your fill, and then figure out if it fit inside of your trading program or your trading plan for that day. Thank goodness once again to exchanges like the CME, and a round of applause for the CME here. They provide us with honest electronic exchanges with great liquidity, and it enables us to use our analysis and get in and out of these markets very, very quickly. So now that I have said that, and you realize that what I think is going on here is the fact that there are not as many humans involved here, there are not as many steps involved here, it appears that analysis works better now than it has ever worked in its past. How can I prove that? Well, right off the bat, traders, the chart before your eyes, by the time we're done with the first portion of this seminar, will absolutely, or I guess in this day and age, I have to call it a webinar, right? It will absolutely prove that fundamentals do come out in the charts first, and that via technical analysis, you should always be ahead of the trend. Does that mean that you'll call every single day, if you're a day trader, the right direction? Of course not. But you should be able to call the general direction, the main direction, time and time again, and call it correctly using technical analysis. Now, why would I say that? Traders, here is a documented case. Before your eyes, you are looking at the S&P Cash Daily Bar Chart. We have videos that we had done back in July and August calling for the high price to be 1577 in the S&P via technical analysis. If you're looking at this chart, traders, that means we called for the market to hit 1577 way before it ever got there. The all-time high happened to be 1576 on the date right here that you can see the high set, which was September 12th, 2007. So July and August, we are giving a projection of 1577 to be the all-time high, and in the middle of September, it actually gets there. Now, without a crystal ball, how could anybody call the high of a market that previous to the high looked like this? Look at how this market is in a major bull run. It runs straight up, and it did for 5 straight years, traders. It ran straight up, nonstop. So how could anybody call the high with any accuracy? You'd have to be insane to think that you could stop this bull. But that's not quite the case, traders. I'm going to post a link in the room. Maybe what you could do is click on that link and then bookmark the video so that after this, when this webinar is over, you can actually go look at this video and see us make this unbelievable call. Again, no crystal ball here. It's all via technical analysis. But we placed a video out on YouTube claiming the high would be 1577 on 7/12/07. And please post that link for me, somebody in the room, if you wouldn't mind. Okay. If you click that link will bring you to a video on YouTube that we filmed on 7/11/07 for the date trading 7/12/07. Traders, that was months before the actual price of 1576 came in. You don't have to go view that video now because I'd like for you to stay here with me so I can show you more about why you can call markets via technical analysis and basically filter out all of the fundamentals as noise. All right, so we have a video stating that we called the high. Now, what has happened here? Traders, one of the things that we found was that, first of all, you put in a V-top, illustrated by these blue lines, and generally a massive head and shoulders is involved when you get to a high end of a market. Also, very important is that you get below the omni-proprietary moving average. Something that we have not seen for years prior to this date right here, 5/23/08. But when you look at this, you can go, okay, Oscar, fine. After the fact, you could have easily drawn that head and shoulders. But that's not how this works, traders. You see this view up here right now? It is called the head and shoulders, right? But this is on a weekly bar chart. I'm going to reduce this down to a daily bar chart because I want you to see what happens when you are making a high and when you are making a low. Because not only were we able to call the high for 1576, we actually have a video posted where we call a low for 668. The low of this entire move was 666, traders. So what I am saying is up here we called for, via technical analysis, 1577 to be the high. Okay? The high turns out to be 1576. Down here, we did a video, and that video was basically to call a low for 668. The actual low turned out to be 666. More than that, nobody can do without either a time machine or a crystal ball. But via the use of technical analysis, we were certainly able to make those calls, and long before the markets got there. I do have a video that we posted on YouTube for the call of 668. Would you please post that link in the room? Okay. Now, again, we don't want you to go off and watch these videos yet. We prefer that you click the link and bookmark it so you can watch it after the webinar. Okay, that link that was just posted in the room by Karen3 is a link for a video that was filmed way before the low of 666 was put in. We missed it by 2 points. Again, this is not about how great our calls were because that does not matter. What matters to all of us collectively is how on earth can you make calls like this, and can all of us do it? And you know what, traders? The answer is absolutely. All of us can make calls like this, and I'm going to break down this chart into a daily now and show you why you can make a call like this of your own. If we turn this into a daily chart, this daily chart will illustrate tops and bottoms, the very same one that we seen on the weekly. I'm going to illustrate to you now on a daily. Luckily, my site actually was able to see this while it happened live via classes, YouTube videos, and of course coming to the chat room. But now we're going to recap. One thing I will say right here and now is this, traders. Recapping what happened in the past is one thing, and it's helpful, but it's not going to help us as much as we'd like going forward or what's happening right here and now in the marketplace. So once I'm done showing you the past, we're going to step into the present. And I'm going to show you exactly what's going on today, what we've been riding the last couple of days as far as our analysis is concerned, and where it will likely be going in the next few days as we are day traders, and this is a day trading webinar. So, this very look that you're looking at here is the same top of 1577, actually 1576. Okay, this is the very same thing, but now this is on a daily chart, whereas the one I had posted for you was a weekly chart. How can you tell when a market is putting in a top? Traders, believe it or not, first of all, it starts off with a shoulder, a left shoulder, right? You have to start somewhere. And basically, it's a huge head and shoulders that tops off markets. One of the many things, but this is very clear for you to see and should be easy for you to spot for yourselves the next time one develops at the top or bottom of any of our markets. That being said, here is a huge left shoulder. In fact, we're going to get rid of all these little circles and we'll just redraw this live in real time for you so you can see it happening before your eyes. This is a chart that we've used in many classes and has helped many of us to decipher tops from bottoms. Okay, now we get rid of all these circles and we start fresh. What can you call for a top in hindsight? Well, in hindsight, this big rectangle in here, inside the rectangle, is what you'd call a head and shoulders formation. If we were looking back, doing the armchair quarterback type of analysis, we could look back and say, look at that huge head and shoulders. No wonder why there was a top. But while that head and shoulders is forming, you need to know if it is a top or if it's just a continuation pattern to the 5-year bull that precedes it. So what's the first thing you look for? Well, what I like to look for is this. If there's a shoulder, does that shoulder have a head and shoulders within it? Because if you start to see a huge head and shoulders with multiple smaller head and shoulders within it, that usually is telling you you are at the top and or bottom of a market. Top of a bull, bottom of a bear. So right here you have a left shoulder with an inverted head and shoulders. And right off the bat you look at that and say, well, that's interesting because this is a left shoulder, illustrated by the big circle. And then there's an inverted head and shoulders within that left shoulder. So it's got to catch your attention. Then, of course, within that there's this weird little head and shoulders right here. So there is a head and shoulders within a shoulder. And then there's a head and shoulders within a shoulder within a head and shoulders. I know it sounds a little bit confusing. Point is multiple head and shoulders building up within a larger head and shoulders pattern. This was how we were able to call the top for 1577 back in 07. Okay, so now you have your shoulder and it's formed. Then it goes up and it forms this head. And once again, we look at the head and we say, well, what's happening in the head? Well, the head has head and shoulders within the head. So now our theory is really starting to come true here because we're seeing a big head and shoulders forming. Remember, right now, we don't have this part of the series yet, right? We formed the left shoulder. Inside that left shoulder, a series of head and shoulders formed. Then we started to form the head. Inside the head, other head and shoulders began to form. This one is another one. You have a shoulder, a head, and believe it or not, this shoulder right here will double as the left shoulder to this head and shoulders, or the right shoulder to this one. 1, 2, 3. So suddenly you have a series of head and shoulders within a shoulder and a head. The next thing that happens is we begin to develop the right shoulder. All of this time, traders, within a V pattern top, as you can see illustrated here. You see the big V top building. And now we look at this right shoulder and we say, boy, isn't this interesting? A shoulder, a head, a small shoulder here. And then if we continue to look further, we have a shoulder, a head. And then you have to call this a shoulder because it did halt here for 2 days. Gave us another head and shoulders. And then finally what happened? The formation was complete. This one right here. Bingo. Now it is complete. Now we're looking at what most likely is the top of our market. Fundamentals at this point in time were way bullish, traders. You go back and read the newspapers, read the tape reels, read through anything of the fundamental reports that were coming out into the middle of 07. They were as bullish as the day was long. And suddenly this pattern developed and we started doing video after video on YouTube. And we were trying to explain in these videos, traders, it looks to us like the top is in. Via the use of technical analysis, we think the top is in. In fact, we became a little bit facetious about it and we got on YouTube holding a bottle of Head and Shoulders in our hands. And we're saying, look, traders, the markets have dandruff. Lo and behold, what eventually happens a couple of months into this Head and Shoulders buildup is this massive breakdown. So far, we were absolutely able to prove that the top had come in via the use of technical analysis, which means the fundamentals, which did not even come out yet, were already in this chart. Because traders, by this date, fundamentals suddenly began to change. Sometime around December 07, the beginning of Jan 08, fundamentals around the world started to look ugly, but it started here in the United States. And our market, which topped out first and began to break, suddenly had fundamentals behind the move. And I thought, boy, is that interesting. I'm calling for a top. I see everything that tells me a top should be in. And now the fundamentals have shifted. So what does that tell me? That tells me that there's a fundamental shift. It happened in the charts first. And now the news is starting to catch up. So unequivocally, we were able to make a high call back here when the markets were way back here. We were able to make a prediction for a high. The high came in, the prediction was correct, and then we started to break. Again, traders, we have no crystal ball. Very, very difficult thing to stand in front of a 5-year bull market and start waving a flag and saying the bull is over. But we believe in technical analysis. We trade technical analysis. We know so well that it works so well that we were brave enough to put these videos out. Now, again, the video dates are right in the room. 7/12/07 is when we called for the high. And that's what I was illustrating to you. Now, it gets more interesting. Suddenly, we break below two very, very important averages right here. We start to break down below the Omni Proprietary Moving Average in purple, or whatever color you'd like to call that. And we started to break down below the 200 bar moving average. Traders, I'm going to step this back a little bit for you now in the past. With the exception of a dip here or there, it is a rare occasion that you get below the 200 bar moving average. Look here. Once we got above it here, it stayed above it for a very, very long time. Still above it. Has a little bit of a test here, but doesn't get below it. And then finally, it starts to get below. This left shoulder gives us a little taste. Gets back above. The right shoulder gets below. And then we begin to crack. All of this was set technically miles ahead of the fundamental news. But this is going to get even more interesting, because now we're going to move forward. Now we're going to move to a time frame of today, which gets really interesting, because the same exact sort of action that we used, witnessed, noticed, and analyzed when the top came in 07, We also started calling for a bottom in 2009. That bottom comes in and looks very much the same as the top did, traders, and this is it right here. And again, if you want, I will illustrate this for you live as it happens. So let's remove all of these little head and shoulders circles here, which basically just show you where the head and shoulders did come in. And then we'll redraw this live so that you can see what is happening here. Very, very interesting. Okay, what's going on here now? Now we've had a massive down move from 1576 all the way down to 666 in the S&P. Traders, that's an insane move. It's the biggest move I've ever seen in my 28-year career. I believe it's about the biggest move anyone alive today has ever seen in their lives. In their careers, no one's ever seen the S&P move this vastly before. So now when it starts to come swooning down, and if we make this chart a little smaller, you can see that it really did come crashing down because we were up here and just smashed lower. And it just kept going and going and going and going, and boom, we hit a low. Just so happens that we started to post YouTube videos back here in the beginning of March this year, illustrated by this little teeny red circle, that the bottom was likely in, and we called it a fundamental shift. We see a fundamental shift coming in the markets. We started that a few months back, and then we really started to pick up the pace on those fundamental shift videos right around March. I believe the beginning of March, if I remember correctly. And in that, we said, look, traders, there is a big shift coming. Currencies are turning. The S&P is now going to turn. And if the S&P turns, the whole market turns with it. And we were able to spot, once again, a huge head and shoulders, but this time inverted. The last head and shoulders that we spotted on the highs, traders, looked like this, right? It was not inverted. It was upright. We had a shoulder, we had a head, and we built another shoulder. And then we realized that the top was coming in because it was full of head and shoulders within the head and shoulders. Now we're looking at a bottoming action, which basically is the exact opposite. First off, you have your V bottom, no doubt, right? V bottom. Boom. So here's your V bottom. Next, we put in a massive inverted head and shoulders. Within the left shoulder, and here's where it starts to get interesting. Within the left shoulder, we start putting in a series of head and shoulders. 1, 2, 3. We put in a shoulder. Shoulder, head, shoulder. Within the shoulder, right? Then this shoulder doubles up as a left and right shoulder because now we've gone to an inverted head and shoulders. Within the right shoulder. And the pattern just continues, traders. You've seen it before. You're seeing it again. Then we put in this little lopsided inverted head, upright head and shoulders within the first left shoulder. And we just continue forward. Then this one here, you put it in an inverted head and shoulders within the inverted head of the inverted head and shoulders. Traders, it just continues on through. Head and shoulders had gone wild within the head and shoulders itself. And I realized, wow, it looks like there's a fundamental shift happening because this looks very much like the top. And then what happens next? We get above the Omni Proprietary Moving Average first, right here. And then we get above the 200 bar moving average, right about here. And at that point, the bottom is in. As far as we're concerned, at least on this big bull leg, the bottom is in. Traders, back in March, the news was horrific. The fundamentals in the United States and abroad were absolutely horrific. Banks were falling apart. The Fed didn't know where to print money from next. China's talking about maybe not using the dollar as a standard world currency any longer. You know what the news was like, right? Well, what were the charts doing when the news was that horrendous? The fundamentals were that horrendous. The chart was bottoming out. Analysis, charts always lead fundamentals. Fundamentals come out in the charts first, unequivocally proven just by looking at how we were able to gauge the high and the low of the stock market before it happened, prepare our Omniacs and our YouTube fans for it, and then watch it materialize before our eyes. That is not possible in this day and age unless something works more so than a guess. And that would be technical analysis. So traders, absolutely, fundamentals come out after the charts. The charts show you what's coming next, then the news makes the chart seem correct. So this whole segment, fundamentals always come out in the charts first. After viewing this chart, you absolutely have to start believing that that's what's happening here. I believe, however, that I can present this case in what I call today's times, right now, here and now, present day. And in order for me to do that, I simply have to show you what's happening in our latest YouTube videos, in our latest analysis here at the site. And we have been following two markets lately, and this now, I'm going to bring you into present day. This now is where we are in the markets. This is what we've been using to trade these last few days. Last 2 weeks, I should say. And when I focus this chart for you, I think you'll understand what's going on here. Here is where we are in the Dow Jones Transportation Average, and in my view, is considered the all-time leader of the U.S. indices and, in fact, world indices. The Dow Jones Transportation Average, about 3 weeks ago, started to go into what we call a bull flag, illustrated here by these lines. Here's your flag pole for you traders that may not be aware of what a flag is, and here's the actual flag itself. So if you were actually waving this around, you know, if you had a flag in your hands and it looked like this, basically it is a flag, right? So here's your flag. That's what happened right here. That is a bullish formation because a flag should look like this. The market should do this with inside of a flag and then take off to new highs. That's what a bullish flag does. So before any of this existed, we were inside the bull flag. We called this bull flag while it was forming, and we said, traders, there's got to be good news coming out because the markets themselves, the charts themselves, are showing us the fundamentals are going to start looking better. We're seeing bull flags, we're seeing parallel channels, and overall we're seeing a bullish market here. So what does that mean? That means once again, not only did the charts lead us to the top, then the news came out, then the charts led us to what would be so far an interim bottom, then the news came out. Now the charts are starting to lead us back into a new bull market. And the news is starting to follow the charts. How many of you have heard and seen the news coming out lately? And it's much better than it was 6 months and a year ago. I'm sure everybody can say that they have seen the news come out, and the news lately has been better than we expected, or at least on par with the higher end of expectations, which in fact is not bearish, because if the news or the fundamentals are pointing towards the upside and the charts are already on their way, well then which one went first? Which one went first? Guys, you're all in this room with me. If fundamentals are now starting to look better, but the chart since March has been going higher, does that not once again prove that fundamentals come out in the charts first? Now, being able to be this accurate was almost impossible 10 years ago. Accurate, yes. Very accurate, almost impossible. Once again, thanks to exchanges like the CME bringing us electronic trading, bringing us what's a wonderful thing, risk management programs that watch traders that can't go awry, that can't put on huge positions that their margins can no longer afford, which is once again disruptions in the market. If you have these disruptions in the market, the markets do not react smoothly. They do not go to the levels technical analysis have called for. Hence, you believe your analysis doesn't work. Well, that was in the past. What's starting to happen now is these markets absolutely follow the analysis almost to the number. And the fundamentals seem to be way behind the analysis. Once again, proving that fundamentals come out in the charts first. The charts show it, the charts move, then the news comes out. With that in mind, we have a bull flag here in the Dow Jones Transportation Average. The bull flag then starts to break out on this day. And of course, we had videos, traders, no denying that we're on top of this. We had a video calling for this flag, YouTube video, to be a breakout. And once it broke out, it went into what I call a parallel channel, as you can see right here. And let me darken this for you now so it looks even brighter. This parallel channel has been able to lead the other world's indices, especially here in the U.S. The U.S. indices much higher. So what does the transportation average do if it is the leader? It's starting to lead higher, and then it has what I call a breakaway gap. Right there, we had a breakaway gap 3 days ago. Market settled, opened higher, rallied, and settled by the highs, leaving this gap. The very next day, the market opened, tested that low, and rallied again. Day 3 rallied higher, and now today we're rallying even more. So we've already put in a higher high up to here using today. So the analysis is really working well. The leader is doing its job leading. And all of this happened before fundamentals came out. So unequivocally, traders, fundamentals do follow the charts. That being said, for many of you new members who are fundamentalists, who are floor traders, who don't believe or call this hocus pocus or voodoo, the art of technical analysis, I would imagine after watching what I've just shown you, you have to be scratching your heads right now thinking, you know what? Maybe, just maybe, the Omni Trading Academy has a point here. Maybe analysis does move first. Maybe, just maybe, fundamentals do come out in the charts first. And no maybe about it, traders. Absolutely, that is what's happening, as you can see right here. Now, if that is true, then if I flip through other charts, other markets should be following in suit with the transportation average. So let's go look at the S&P for a moment. So if that's the case, traders, we are now looking at the S&P daily bar. Look what has happened. We are not nearly as high as the transportation average yet, but we are certainly high enough to realize that the S&P is doing what it's supposed to do, which is following the transportation average. Inside of a parallel channel, making higher highs every day. The leader is pulling at the followers, and the followers are right there. Now, the parallel channel seems to be a phenomenon which took place on the way down and is now taking place once again on the way back up. For any of my video fans that have been watching for a while, on the way down, we did this several times. We put in what was a head and shoulders. And from the head and shoulders, we went into a parallel channel. And many of you would remember this. And then we put in a head and shoulders. Do you remember this, traders, in this room right here? Okay. Then we put in a head and shoulders. And we went into another parallel channel. This was on the way down from 2007 to 2009. And we went into another parallel channel. And it happened 3 times before we finally hit bottom. 3 major parallel channels, 3 major head and shoulders. Then we hit 666 and bottomed out in the S&P. Well, where are we right now, traders? Where are we right now is right here. We put in, and if you use the cash market, it's much clearer, but we put in a massive head and shoulders. Again, you've already seen this. I'm using a December S&P data right now, so it's not as clean back here. But first we put in a massive head and shoulders, and now we've put in a huge parallel channel on the way up. It is exactly opposite of what we've seen on the way down. Traders in my 3 trading rooms right now here at the site, do you see this? How many of you remember the series of head and shoulders parallel channel, head and shoulders parallel channel, head and shoulders parallel channel on the way down. Jag, you remember? How many of my long-term omniacs remember this? Pearl, Sideshow, Joe Agent, Gambler, Cyprian, DJ. All right, so many of you remember. RJ, Jim V, thank you very much. That was the lesson on the way down. Traders, look at it happening again on the way up. Now, what happened? On the way down, there was fundamental news. The fundamental news was good right about here, but it wasn't right. Then the fundamental news started to be bearish right about here. And finally, the fundamental news was the worst you ever would have imagined when we put in the third head and shoulders. Now, we're starting to head back up. It looks exactly the same, traders. Here's your head and shoulders. Here's your parallel channel, but it's on the way back up. Sorry to interrupt right here, traders, but at the site, we all bought, a bunch of us bought soybeans on the dip, and now we're rallying. So sorry to break away for a moment, but traders in the golden premium room, please exit your soybeans here. You have a few minutes before the close. We've rallied smartly. Everybody's in a profitable position. So get out of your soybeans. I'll give you 3 minutes, and then we'll continue with the seminar. Okay, traders, we're back now. Again, we just needed to get out of our soybean trades and up. Traders, whoever took the soybeans, very nice. Very good. Our only trade for the day. Okay. Okay, traders, so now that we have seen clearly, unequivocally, that fundamentals come out in the charts first, knowing this gives a trader, a technical trader, an advantage when planning his trading strategy so that you can plan a strategy not caring what the news will be the next day. That's the most important asset about technical analysis. You don't need to worry about what the news is. The news is built in, as you've seen. So if you are going to do a trade strategy, if you're going to plan a trade on a Tuesday night for Wednesday's trading, does not matter what report's coming out Wednesday. It doesn't matter if it's unemployment, if it's employment, if it's interest rate hikes, if it's not rate hikes. It doesn't matter what the Fed says because it's in the chart first. The chart should point you in the direction. So no matter what the news is, it should already be predetermined in your trading plan for the day. That is what we teach here at the Omni Trading Academy. It is paramount that you know that. Forget about what the reports mean. We can't figure them out. It's impossible for us to sit and figure out all the reports that come out all week long, plus all the news, plus all the unexpected news, and everything else. It's basically impossible for you to, yes, you can read it all, but can you get it all right? If the Fed's going to raise rates, that means bonds should do this and currencies should do that and S&P should do this, but you don't know what traders' reaction will be around the world. So how can you plan for that? You cannot plan for that portion of the trade. The portion you can plan for is this. I see the bottom of a channel. At the bottom of that channel, I'm buying. I don't care what the news says. When it gets here, I'm getting long. And when it gets up here, I'm going to get out of my trade. If you're a long-term trader, that's what you do. If you're a short-term trader, you're looking for a day trade. Where is it going to stop on the downside so I can buy it? Where will it rally up to so I can get out if you're a bull that day? Of course, where will it stop going up so I can sell it? And how do I know when to buy it back if you're a bear that day? That's part of being a day trader. Using technical analysis and what we call technical indicators, not only can you see the trend coming, you should know when it's going to turn the other way. What does that mean? Back to the chart. This chart being led around by the Dow Jones Transportation Average, which is higher than it right now and moving smartly, with a breakaway gap, by the way. This one following it, being the S&P, has indicators, as with any other market. And I'm only going to show one or two. Indicators are formulas that have been developed by very smart people tens and tens of years ago. Some of them are kind of new, but most of them are not. All the research has been done. All the money has been spent. All the trades and backtesting has been done. And the indicators that are out today are basically indicators that you can count on. So there's no need to reinvent the wheel. So what do? We take the indicators that already exist. First, we look at the chart formation, and if the chart formation is of a positive structure, i.e. bullish, like this one is, if this is bullish, then we go see if our indicators are bullish. Well, what do you know? The commodity channel index is pointing in the same direction as the market, straight up. Formation bullish, indicators bullish. Well, that means the market is bullish. It does not matter what the news is. It does not matter what's scheduled to come out today, tomorrow, or next week. This is telling you A, bullish structure on the chart. B, bullish technical indicators. What do A and B equal? C, bullish news will be coming out eventually, because it's already built into the charts. And I will continue to stress this. Fundamentals always come out in the charts first. That is so important that you know. Once again, something that we discussed right in the beginning of this webinar. Fundamentals coming out in the charts first almost didn't help you 10 years ago. Because when you used your technical analysis to figure out what those charts would mean and what those reports would mean, it didn't really work as well as it used to. But once again, thanks to the CME group and others like it, we can attribute the accuracy of technical analysis to these electronic markets. And that's no joke, traders. I have seen this for my own eyes. You can go back, check with members at the site, my site, livewithoscar.com, and you can check my recommendations because all of them are logged. Every recommendation we've ever done is actually stored. And you can see that we've gone on 40, 45-day winning streaks, traders, where we day traded every day and won, day after day after day. That's almost impossible. Almost impossible. But it is done, and we do it, and we've done it quite often. That's happened because technical analysis has come together with electronic markets, level playing fields, and now you can get in and you can get out at your prescribed levels and follow your trading plan. Once again, another indicator, the relative strength index, pointing straight up, as is the chart formation. So indicators pointing up, chart formation pointing up. The only thing you can think is that the market will be pointing up. Once again, stochastics pointing straight up. Stochastics, again, another technical indicator confirming that we have a solid formation, bullish towards the upside. Once again, the news that would push this market higher has been bullish no matter what the sound of the street is like, because you can hear the street day after day calling for the new high to be the only high. The new high is the top. The next new high, well, that's the top. And then you hear it again, we make another new high, well, that's the top. That's not how analysis works. It doesn't matter what you think the top will be. Analysis will tell you what the top will be if you pay attention. Not only in this market, traders, now we're going to go look at something else. If it was just in the indices, then we'd have some sort of phenomenon where analysis only works at indices. Once again, we did a series of videos. In those videos, we called for the US dollar to top out back in March of 2009. We have a lot of videos, in fact, leading up to that, all through 2008 and then into 2009. Once we started to get into 2009, we showed you that there was a very, very strong topping pattern here. What that topping pattern is, as you can see, traders, once again, a head and shoulders. That head and shoulders came in, the high of the head and shoulders topping pattern in the dollar index came in March of 2009, exactly when the bottom came in on the stock market. We called for the top in dollars. You can find many YouTube videos in time with this call. before the action took place. And then you can find a lot of our trades taking place were based around now dollar will begin to break down and euro currency will begin to go higher. Once again, traders, the news at the time was, oh my goodness, you have to be long dollars because that's the only thing in town. And our analysis said, no, 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 traders, forget about those dollars. And what happens in here, traders? Look at this. You have a shoulder, right? Inside the shoulder, you start putting in inverted head and shoulders. Within the left shoulder, here's an inverted head and shoulders. Clearly. Then it starts doing it again. And if you look, you can find smaller head and shoulders all along within this major head and shoulders in the dollar index. Once again, showing us that we are in for a fundamental shift. And we did a video stating that this is a fundamental shift. Do you have that link? Traders, right around this time, we did a video stating this is a fundamental shift, whereas stocks should bottom and dollar index should top out based upon our analysis. Then, weeks later, the news came out, which confirmed our beliefs. Okay, what happens next? We put the head and shoulders topping pattern in. Then I put this grid across here and I show everybody how rounded this top is. It's a beautiful rounded top. Everybody likes to see a rounded top. Then what else happens next? We go into a parallel channel. That's where things get interesting. We go into a parallel channel here. Just like in the stock market, when it topped out, it put in a head and shoulders and a parallel channel and then a head and shoulders and a parallel channel. Well, you're getting the same look here in the dollar index. And the dollar index since then has severely topped out. So this actually does work quite well if you look at the euro currency. You will see the same sort of action. Back in March, you put your bottom in and it just exploded from there. That was all analyzed technically. We saw it coming. We announced it would be coming, and it did happen. Once again, the news was horrific back in March of this year. The news was still horrible. News since, or fundamentals, have gotten a little tamer, and the markets continue to climb higher. We are putting in all-time new highs right now for this move in the euro currency, just like we're putting in new lows for the dollar. And the stock market is putting in highs for this year as well. Once again, technical analysis proving that fundamentals do come out in the charts first. So I would like now to take a couple of questions, especially from our newer members here, just one or two about whether or not you feel the topping pattern is something that you have seen for yourself or that maybe you can learn this time around when you see it next time. After what you've seen here, traders, let me put this chart back up. And then us illustrating to you what that looked like on the daily, finding the head and shoulders within the head and shoulders, and then the consequent breakdown. Do you think that now you would be able to find this on your own? Because after viewing this video, and of course watching the rerun because it's being recorded, you should be able to spot these highs and lows for yourselves. That's the whole purpose of us having our Omni Trading Academy and holding our classes, because we want to teach you how to spot this for yourselves. We want to get your head out of the fundamentals and into the technical analysis, because once again, thank goodness to the CME group and others like it, we now have a vehicle where we can trade this without interference. Technical analysis meets electronic trading, and the two of them together make beautiful music. And I would like for you to be able to figure this out on your own, so please continue to come on down to the Omni Trading Academy where we can help you. Now traders, this is the beginning of a series. We would like this to be the first, and we'd like to invite you to more to come. The series is named Tools of the Trade. The first tool we gave you was fundamentals always come out in the charts first. From there, we will present more of these webinars, giving you more and more tools for your arsenal. Next webinar we expect to be around 11/16/09. We will certainly update you once we have that webinar set up and send you out the link so that you can come to our next one. These webinars should help you. And again, this is not hindsight because we gave trades all last week and this week based on what we see today. We made these calls way before they ever happened. We were able to do that because of technical analysis traders. Again, there is no crystal ball. There is no holy grail. It does not exist. No one out there has the best trading program on the planet, electronic trading program that's automated. It doesn't exist. If it did exist, the government would have held it and made hundreds of billions of dollars on this latest big down move that we've seen between 07 and 09. It obviously doesn't exist, but many of us technical analysts were able to call the highs and the lows based upon simple technical analysis. And you can too if you continue coming to our webinars and you stay at our site and come to our classes. So I really hope that these webinars will help keep you in tune with the broader picture. That is our plight here, to keep all of you traders in tune with the broader picture. And I'd like to thank each and every one of you for showing up to today's class. And it was called Fundamentals Always Come Out in the Charts First. We would like to thank the Dorman Trading Group, the CME Group, and all the Omniacs around the world that showed up for today's lesson. Thank you once again very much, Omniacs. Traders from the CME, if you don't come on down to our site, we will see you on 11/16/09 for our next series. Thank you very much. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.